What is going on, everybody? In this video, we are giving you a state of the market in stock picks for March 24th, 2022. So if you are interested in daily and weekly updates to get you ready for the day in the week ahead, consider subscribing, as that's what we do right here. So today we are talking about state of the market. What is going on in the market post Powell? Well, Powell did come on again today. He was at a summit. The thing is he was on very briefly, and he kind of just skimmed over a lot of the same, reiterated a lot of the same stuff he's been talking about. You've had a lot of different other Fed members starting to show their face. Again, you'll get a lot of Fed members coming out and giving their opinion about how hawkish they are and everything. And typically that was moving the market before because we were unaware of what was actually going to occur. But we are post Powell now. We are aware that we have a 25-point basis increase, and then we are possibly getting a 50-point basis increase in May. Being said, the market, in my opinion, is very bullish. Rate raises occur all the time. And so being said, this point, I was coming into today really thinking about, our rate raise is really going to make that big of a difference. Now that we know the pace at which the Fed are going to come out with rate raises, I think we know it was going to happen. This is not something that is unforeseen. And I think anytime in the market, if it's unforeseen, it makes an impact. If it's new, it makes an impact. Rate raises are not new, so it does not make a huge impact. We are all aware. We just didn't know how much and how quick. Yes, it will slowly unfold. We do have 25-point basis move, and it will continue to increase from that point. So the market adjusts. The market knows about this stuff. It's nothing new. That's why the market's not crashing. Everybody's going to say the market's crashing. The market's crashing. The market's not going to crash, right? Unless it's something completely new. We came into this year not knowing that what the Fed were planning on doing. We knew they were going to try to start rate increases, but we didn't know by how much. We didn't know the time frame. We didn't know anything. And so the market did it by itself, by correcting itself to try to price that in. Now we got the 50-point basis move. We came under that. We do have another possibly double rate raise coming up. If it's not next month, it more likely will be on the next one, or sometime this year we'll definitely get some kind of double rate raise at some point. So being said, we still need to be aware that we are purchasing bonds. Assets are still being bought up. Now, you have a lot of Fed members come out today, say that, hey, we're not going to, the purchasing of assets can stop at any moment. We're well aware of that, but that is solely dependent upon what is going on with the war with Russia and Ukraine. In my opinion, they are not going to stop buying the bonds until the fear is completely gone out of that situation. When that situation dilutes, then they will start rolling off asset purchasing. But you'll have the Fed come out talking about it. Yes, at any point. Yes, we're well aware at any point this will happen because it is very much dependent on the war. It is very much dependent on what goes on with that, because now that everything else, the whole pandemic stuff is kind of calmed down to a point where the economy is adjusted. So now it's more, okay, well, how long is the sanctions and the lockdowns with China lockdowns, and then you got the sanctions on Russia? How are companies going to be able to adjust to that? Because a lot of them do get a lot of profits rolling in off of Russia as well, and supplies. So being said, where do we go from here? And I think we are bullish to an extent, because we have to understand that, again, none of this is new news. It's all old, repetitive news. When it gets old, repetitive news, the market's going to continue to push up until something changes. If something changes, the market will adjust. This is ultimately what we're looking for, right? We waited almost 3 months for a rate raise. We got it. We kind of understand what's going on with the front time frame. We're A-okay to continue to push up, and we'll adjust. We'll still have volatility. Yes, when we get new rate raises, we'll have some volatility, but we're not going to crash back down. Earlier I thought it was a possibility, but I really started thinking, it's not going to happen because it happens all the time, right? And something I've always stated before, if it is not new news, if it's not something new that people are unaware of, right, then that's when it starts bringing a massive amount of volatility. That's going to perhaps correct the market again at that point. It's not saying that the correction will happen again. I think there will be another correction. Normally around the October timeframe is normally when we have another correction. I think we could be possibly bullish till that point. Again, it all depends on how long the Russia-Ukraine thing lasts. I don't really think it's going to make that big of a deal for the market to continue to push up. I think we might get some selling going into the next earnings, just dependent upon how we do because of the sanctions and how much impact it's having on companies. But aside from that, I think if they do good, if they do figure it out, we're just going to continue to start rolling. Again, we came into this year one of the worst years in decades, and so now we're coming in. We're at a good low point to start proceeding to go back to all-time highs. I think we're going to just bottle rocket straight up. No, we don't have really great news. It's just bottle rocket straight up, but we can continue to start pushing up slowly, grinding up slowly. If they do good on earnings, I think that's a catalyst to keep pushing us higher faster. But then again, it also depends on when the Russia-Ukraine war ends. And when that happens, that should stop the asset purchases, if I could talk here, asset purchases, which would eventually cause the market to probably not correct, but pull back a little bit more because of that, because that backstop is not there. This is, again, why also Powell keeps reiterating that the market is strong. The market is strong. If you notice this every time he's been speaking lately, he keeps reiterating the market is strong. So this whole purchasing of assets is because of one thing, and that, in my mind, is the Russia-Ukraine war. Because there is that fear that still exists today. So being said, let's look at the markets. We're finally starting to pull back. Again, this is normal. This doesn't mean we're going to crash all the way back down. I think we can actually head back down to the 43.38 mark. It's kind of what I'm looking for a retest down here. We do have the 200 EMA. We may not even break below the 4,400 mark. To be honest, I think we could hit the 4,400 mark and continue pushing up. I think is a very strong possibility. We could correct. That's more of a 50% correction. I don't know if we'd come that far back down unless we get some bad news. But ultimately, I think the 200 is pretty good for me. So again, looking at that 4,400 mark, again, it's also a psychological level. So I think we get a nice bounce there for continuation. So I'm looking for possibly another day of selling tomorrow. Again, if you notice, the selling hasn't been as bad lately. A lot of shorts got squeezed out in this last run up, and the shorts are starting to realize that the economy is not the stock market. So being said, the 4,400 mark is kind of what I'm looking at for SPX for continuation. It needs a hold there. It can come lower again, as long as we can create a lower high. We could even hit this 42.87 and be perfectly fine, and that'd be our new lower high and continue up. So just be mindful of that. Again, it doesn't have to go down. Don't buy in. And that's the biggest thing I say. You get a lot of other YouTubers and a lot of other people, news and analysis saying that, hey, we're going to crash. Everything is essentially going to shit. And which is true. I mean, this is the world we live in. But nonetheless, I mean, that's not going to cause the stock market to come tumbling down. It's all, again, normalized news. There's nothing new about the news that comes out. So Bitcoin, again, it's looking very strong. It's very bullish in my opinion. It looks like it's actually ready to rock. We did retest coin. Matter of fact, it'd actually be a really good play here. So I'm kind of looking at coin tomorrow. I want to see what Bitcoin does. I think Bitcoin's going to try to break out here again. Again, that 4,500 mark, 45K mark has been really tough to break through. But I think if we can get through that, again, Bitcoin likes to really run during the weekend into a weekend. So like your Thursday, Friday, it will just start running and possibly breaking up. I think we could get that this weekend. I know Cardano has a lot of different things going on in these last couple weeks and into next week. So that in itself, I think, has really helped in the crypto space in general. Again, regulations is something you have to keep in mind. But I think that's just more of a positive to solidify the crypto and its place in the future. So going in tomorrow, Tesla. I always talk about Tesla, but Tesla really needs to pull back. I mean, there's been a lot of people following the Tesla. This is what always happens with Tesla. I think we can get another pop and retest to try to get to that the 1040 tomorrow. Strong possibility, but I kind of really want it back down on around 900. 900 might be the new base again. So looking for it to kind of come and settle there. Again, Tesla doesn't normally sell off heavy. We had a heavy sell off, so you're going to see maybe a little bit of a dip and then kind of chop and then start pushing back up again. So this might be the last time you actually see Tesla below 1,000 4 minutes, possibly until October, but we'll have to see about that. So we have to see where this goes from there. UPST is what I'm watching. I'm really watching that $100 mark. I don't know if we're going to make that. This 112 has been holding really well. So kind of watching 112 tomorrow as well. Even if you look on the daily, we did make a lower low here, which is not very good, and a lower high. So this could be concerning, but it really just depends on how this plays out. This could be a break. So ultimately what we're trying to do here is look to see if we can get a break on this. I think it's important for UPST, and it really does need to hold the $100 mark. It's even gotten down to 86. But as I said, I think SPX can pull back a little bit more. SPX index needs to pull back a little bit more. So if that's the case, again, I think we could hit that $100 range and still be good. We might play this wedge and then break out. A strong possibility. Again, it's killed earnings again. It does extremely well. But again, you did have that bad news yesterday on loans not being repaid and essentially in a timely manner. So with that being said, we have to see how that's going to impact earnings. So we'll have to wait on this one, which we still probably got about 2 months, 2.5 months before we even get new earnings on this one, but we'll have to see how that goes. Apple's been ripping. Again, I still want this to come retest the 165 mark. Be a good retest on that one for possible entry. And then you're looking at essentially 175. I think it's going to make that particular one, that run into earnings, I think is what it's going to do there. And then I think we'll hover around that 175 till we get earnings. Again, see how much of an impact it's going to have, because the China factories are essentially been taken over by China, I believe, because of the lockdown. So just be mindful of that. It could impact that a lot. Shop is a really big one I've been watching. I'm watching this wedge. It looks like a big bull flag here. Could possibly be a bull flag, but we're really holding that 736. I want to see if we could break above that. If we can get a daily open above that, which tomorrow we may not. Like I said, we may pull back more. We may actually come back down to this. I don't know if we're going to hit that 600, get the 650 psychological level. So it'll be interesting to see if we come back to that, but definitely watching this one. Again, I think it can make it all the way back to 1K. So that is what I'm looking for on Shop. It's not saying it will. Again, it's not financial advice. It doesn't have to make 1K, but I think it has a very great potential, and a lot of people, especially not being in work, are opening Shopify stores. So, I mean, fundamental-wise, I think it's there. It's a very sound company. But we have to see where it stands going into tomorrow. I think we're going to get one more pullback tomorrow, possibly even into Friday, setting up for next week for a nice run. But we'll have to see. AMC is one I've been playing. I played a lot today. I played it twice today because there's just a lot of momentum in the stock. You know, the fundamentals of the stock, I don't believe. It's complete meme stock. And any kind of positions like this, I don't take heavy positions. Because of the fact of what it is, fundamental wise, my conviction for it. I have absolutely no conviction. AMC, this is a purely momentum stock play. So if you are essentially a rookie in the market, I would not be playing stocks like this. But ultimately, really looking to see where this is tomorrow. Kind of looking for a higher high. It may have already hit that. This thing normally likes to go parabolic after hours or first thing in the morning. So if we do get a higher high tomorrow, if we open up at the 20, essentially the 23 mark, look for a retest on this trend line. Again, you're going to get about 3 or 4 days of these pops, and then what's going to happen is on the fourth or fifth day, typically you don't want to be. I think the third day you're kind of pushing it, but like the fourth day, you really don't want to be playing it because typically if it hits fourth day, it'll normally sell off. So you're going to stair step up and then essentially elevator down. So watch out for that tomorrow. But I'd be watching this trend line on AMD. Actually, this you could even say it's just a channel. So you're looking at this channel tomorrow. For AMC, I do like. Could potentially pop if we do pop, wake up here at the 23.27 mark, and then wake up in the morning. We pull back down here, maybe the 22, make another attempt at the 24. And then I think at that point, you probably get more of this. It does play this chop and kind of base a little bit, but if it holds the base well, you get a nice little pop. Made some good percentages out of these two big candles here. So I think that's important to be mindful of that and watch that tomorrow. It's one I definitely want to watch. Google's been interesting. This one you might want to really keep an eye on here because it is starting to wedge pretty tight. And considering today you had nothing but this chop here, I think if the market pushes at all tomorrow, this thing is going to rip. And considering it's been one of the front runners, it's been really held down. I definitely want to watch Google tomorrow and see how that does. Again, it could even start wedging down into this 20 EMA weekly, so that 20 we'll go about the 2740 mark. If we can open up above there, you want to break above, and the best thing to do is try to capture that retest. If you can get that on the hourly, that's why I like to watch the hourly. If that retest is on the hourly, grab that hourly candle, and then it could get a nice ride back up to the 2800 mark. So kind of really watching that tomorrow. One thing about chips, I do really like chips. I talked about MU yesterday. We did have a bit of a sell-off today. I tagged out of this, looking to possibly get back into this. But the big thing with the chips is there's a lot of sanction news coming out with the EU and their struggle with gases and stuff in Russia. So if there's a lot of sanctions that come out, I think chips are going to be hit bad because of the fact that the semiconductors, when you start placing a lot of sanctions, the semiconductors start getting affected. So we really want to watch and see how this does. The chip space has gotten really weak today and may continue to sell. So just be mindful of that. But with this massive selling, if there's anything that comes out that's not nearly as bad when it comes to sanctions, I think these things can really start ripping. Roblox, I really do like Roblox. Kind of looking to see if it could come retag that 47 mark. It's been doing well so far. But again, if we get a retest tomorrow, normally Roblox will push as the market sells. If big tech starts to sell, and that's kind of what I'm looking for tomorrow, is if big tech is selling, I'm looking for some value plays. So I think Roblox could possibly have a big day. If it can hold this 48 mark, I think it could be a pretty nice run up to the 53 mark tomorrow. Again, most of the bigger moves happen within that first 2 hours, and then after that, it's kind of a free-for-all. Airbnb is another big one to watch. It's been kind of consolidating here. So if you can snag it essentially at 163, I think you can get up to the 167 first thing in the morning. And then I'm looking for a possible breakout into this next zone to about 173 tomorrow, especially if there's a rotation in the value. Airbnb is one of the ones that starts really ripping, and I think this would be a good one to watch tomorrow for that. Ultimately, but I think that's pretty much it. I don't want to make this video too long. I know I kind of rambled a little bit in the beginning, just trying to get some information out there. So if you made it this far, go ahead and drop a like button. Until next time, I'll see you guys later.